Okay, this is the second and an extremely important video cast the on the Russell 2000, which was the biggest winner yesterday. Um, It's a chart you've seen many, many times. You have to do a little bit of homework. Actually, quite a bit of homework if you want to understand charts. You can't be just asking randomly about, like, why things are going on. If you look at the charts, they're extremely precise. What I've been doing lately, okay. And again, I don't control the market. I'm a messenger on the markets, for the markets. And the bottom line is that I transmit what I believe to be the interpretation of what is going on. Okay, so just keep that in mind, please. So bottom line is that I've shown this chart many, many times. This level that I kept on posting held, this 1152 level. All right. So when you want to see a classic hollow candle type of reversals, this chart shows it a lot more than the previous one. And let me show you why. Okay. Let me expand it a little bit. This pattern is clearly telling me, by the way, before I move away from this screen. This is the longer 120-minute 2-hour chart going all the way back to June, that we are most probably going to get up to about 1186 or so. My video casts have clearly explained all that stuff, so I don't want to repeat the same things. So 186, there's a gap here that needs to be filled, and it looks like it'll probably get there in a hurry. In the meantime, this is going to act as resistance, this downtrend line all the way from 1215, and that resistance is around 1178. Okay. Now these things are important for traders, because if you're trading the small cap market, or if you're trading the IWMs or the RUTs, which are very profitable trades, both long and short side, then you obviously need to have build a friendship with this chart. And as simple as that. Build a relationship with understanding how these patterns work. So let's go back to the hollow candle stuff. All right. So can you detect what the hollow candles are? Well, if you look carefully, you will. There was one here, right off the bottom. We moved up, we fell really hard, and look at this hollow candle right here, right there. All right, and 1 second. So right there is one hollow candle, right? So here, these are just, again, the world's ending here, a reversal pattern. See that? World ending here, reversal pattern, gap open, run up, same old story. I've shown this many, many times. There was a big gap here that needed to be filled. It did. Came down, tested the 34. Okay, the orange line being the 34 moving average. Went up, filled this top right here, moved up, came down, gaps. Russell, IWMs and Russell 2000 are all about gap opens up and down, right? And then comes yesterday's hollow candle. So here we moved up from this level, which was exactly what I had predicated and drawn on the charts. You can go back and review them. And we bounced off that, and there is your hollow candle reversal right there. What happened after that? Absolute monstrous move up. 1158 to 1172 in one single day. Let me move this, look at that. So at this point in time, it looks like it wants to get, which we said before, towards the 1176 level. This is the Russell 2000. So let me get this again and reiterate where these candles are. Draw. Here's one. Tells you that the market's going to go higher. Then we have another one here. Okay, you can see that, and all kinds of stuff. So at this point, this is the target that I'm looking at. Let's take a look at the IWM, and the IWM. Let me see if we can see it in this. Let me take a broader view so you can see what's going on here. This is the picture of the IWM, which kind of tells the story of the market as to where we are. So if you look at this chart here, you can see that it's building, it's doing this pattern. So at this point, wouldn't be surprised if it tests the highs before the market tops, or if it at least tests the upper end of the Bollingers, which are around these levels, okay, which are right here around the 117, 118 level. So that's should you be looking at. On the breakdown side, if we convincingly break down below the 114 level, it looks very likely we're going to test the 112, if not the lower, and that would be pretty dramatic for the markets. We all know that. Let's take a look at the and the other thing that I monitored all through the day, which really helped a lot of people, was the VIX. Now look at the picture of the VIX here on an hourly basis. All right, the VIX on an hourly basis. It doesn't look good. All right, right there, right there. When the hollow candles appeared and the reversal, this is what the VIX did. So if you want to extrapolate what the VIX is doing, it looks very likely that it's going to come down to about 12. It closed yesterday at around 1280. Now you can also hold this line. This is an uptrending 50 and 34 on the hourly, so it could basically bounce off this and go up here again. Market pulls back hard, or it falls and comes down towards this level before it bounces again. The VIX is going to bounce. The market will, correct and correct bigger than what we have seen. Even though intraday we have had 1% corrections all through the time, even though they don't really want to talk about it. So there has been rolling corrections across the board. And keep in mind that individual sectors have corrected on their own without a large 10% correction in the market. I've kept on saying this, I'll keep on saying that. Individual sectors, which we have clearly identified many of the stocks, the FireEyes, the Splunks, the Viva Systems, all those stocks, they corrected a lot. And no wonder now they're all, being chased by the momentum players. So we were there far earlier. Twitter was a huge correction. No one wanted it then. Now they're just chasing it up. We're probably going to go into the gap at 62. So here's the RVX. I don't know if this is a misprint or not, but the point is that this is what happened. All right, yesterday. So you got this. That's probably a bad print, or a panic bad print, whatever you want to call it. But if I look at the daily chart here, it actually doesn't look that much like a bad print. So the RVX was a prime example. So this is what happened yesterday. Okay, so let's look at a shorter term picture. It reversed. This yesterday was 11, so it reversed. If it went there or not is not my concern, but it was a huge reversal. There was also another reversal at around 10:45. So these things tell me, and these are the reversals I'm talking about. Remember, this is the fear index for the Russell 2000. So same as the VIX. So when you have these type of reversals, you know that the market's going to, at least found the bottom for the day and going higher. Now at this point in time, this is a 15-minute chart. It looks like there's a reversal candle here on the upside. This is a downside reversal. So I wouldn't be surprised if we have a pullback a bit during the day today. Here is the key point that all of you need to take away from it. This is an extremely volatile, choppy market. There are patterns that I've shown very clearly and that have been extremely accurate. However, intraday or intra-week, the swings are absolutely wild. So regardless of what somebody's larger thesis is, I will still stand by the fact we are in a topping process. But topping process doesn't mean we're going to start to go down one fine morning and go down 600 points. Anything can happen. I was there on Wall Street during the flash crash. I saw what happened within seconds. So the bottom line is, taking out those type of black swan events, what I'm trying to say is, predicting the market at these levels is a futile game on a very short-term basis. We're playing certain stocks. Those are doing extremely well. Take profits along the way. We have some new additions to the stocks that we're trading right now on the long side, and let's see. But like I said, be flexible, be aware of your surroundings, be ready to adapt to very fast-moving circumstances, and trade within moderate amounts so you don't lose your shirt when things go wrong, or go the other side, and that's it. All right. So I'll be re-engaging with everyone over the weekend on the weekend report, and in a few minutes on the Twitter live feed. Thank you very much.